So you finally managed to save your first 1,000 ringgit. It might not sound like much, but that's exactly how much I started my whole investing journey with. When I first got into investing, I only had 1,000 ringgit to my name. This is money that I saved up from, Deepavali ang paos, some side hustles here and there. But I told to myself at that time, if I can't even manage this 1,000 ringgit properly, I'm pretty sure I'm never gonna be able to manage 10,000 ringgit or even 100,000 ringgit later on in life. And that small 1,000 ringgit, that was my starting point. And over the next few years, through a lot of trial and error and some very painful lessons along the way, I slowly turned that 1,000 ringgit into a six-figure investment portfolio by the time I was 24 years old. So in today's video, I want to show you exactly how I would invest 1,000 ringgit if I were to start from scratch all over again. Because let's be real, the world's different now. Interest rates have changed, the stock market is at its all-time high, and there are a lot of new platforms and opportunities that didn't even exist when I first started investing. Along the way, I'll also share some of the mistakes I wish I could have avoided, because when I first started investing, I didn't really have much guidance. I had to learn everything through my own experience and also do a lot of trial and error. So hopefully by the end of this video, you'll have a clear idea of where to start, how to grow your money wisely, and what to avoid, so you can skip all the beginner mistakes which I made throughout my investing journey. So let's get into the video. Now, first things first, before you even consider thinking about investing your first 1,000 ringgit, the most important thing you need to have first is an emergency fund. I know it sounds a bit boring. You came here wanting to invest your money, not to save it, but this step right here is non-negotiable. Your emergency fund is what keeps you from going broke when life decides to mess with your plans. Here's the thing, when you invest, your money is not always accessible. The market always goes up and down, and if something urgent were to happen, you might need to force sell your investments at the worst possible time. Let's say, for example, one day your car suddenly breaks down. Maybe your tire pancit or your engine rosak, and suddenly you need to spend a few hundred ringgit, maybe even thousands, just to fix up that car. And if you don't have any emergency savings, you'll have no choice but to withdraw that from your investments. And imagine doing that when the market is down. You're basically selling at a loss just to cover for an emergency. That's the exact situation you don't want to be in, because investing is meant for your future, not to fund for your car repairs or other emergencies. So before putting your money anywhere, make sure you have saved up at least 3 months worth of your living expenses as your safety net. For example, if your monthly cost of living is around 2,000 ringgit, I'm talking about your monthly expenses, then 3 months would be about 6,000 ringgit. But if that's too much for you, it's okay. Personally, when I first started, I didn't have that much as well, so I aimed for just 1 month worth first, then slowly build that emergency fund up over time as my income started to grow. Now, if you're wondering where to keep that emergency fund, I'd go for something like Versa or a high yield savings account. Personally, I use Versa because it's low risk, easy to withdraw from, and you still earn up to 4% in interest per year on your savings. Plus, if you sign up using my code VERSAROTI or by clicking the link down below, you'll get a 10 ringgit bonus when you start saving with Versa. It's basically free money, so why not, right? I'll leave this link in the description down below for you guys to sign up. Alright, so once you've got your emergency fund all sorted out, now we can finally get into all the good stuff. Let's finally talk about investing this 1,000 ringgit. And to start off, I want to talk about something that I was really into when I first began investing, and that is dividend investing. So when I first started investing for the first 3 years, I was mainly a dividend investor. That's how I got into the stock market in the first place. I absolutely love the idea of earning passive income. You buy a stock, you hold it, and no matter if the price goes up or down, you're still gonna get paid this thing called dividends. It felt like the perfect way to make my money work for me. I remember buying companies like Maybank, which paid about 6% a year in dividends, and I thought, wow, this is damn great lah. I just hold my shares, lose a couple games of Dota, and I still get paid. It sounded like a cheat code, right? But after a while, I realized something. Even though dividend investing sounds great, in reality, I was missing out on a lot of upside potential. The Malaysian stock market is slow. the growth is very limited, especially if you compare it to the US stock market. And I started to feel like my money wasn't really working as hard as it should. Plus, when you only have 1,000 ringgit when you're just starting out, dividend investing doesn't make that much sense. Let's be real, if you're only getting paid 6% a year in dividends, that's only 60 ringgit a year from your 1,000 ringgit as dividends. 60 ringgit, that's like one nice meal with your friends at a fancy mama in KL. And I know people always say, but if you compound it over time, it will grow. And yes, that's true if you're investing large amounts of money or by adding money every single month. But for me, at that stage of my life, it didn't make any sense. I was still young, I wanted my money to grow fast, and I had so much more time left in my investing journey. That's when I started realizing dividend investing is only better suited for people who already have a larger capital, or for those who are looking to protect their wealth and earn steady income. If you already have hundreds of thousands, then yeah, it makes sense. 100,000 ringgit invested at 6% gives you 6,000 ringgit a year. Now, that's at least meaningful passive income. But when you're just starting out with a small amount, you'll grow much slower if you only stick with dividend stocks. So this is the first mistake I made in my investing journey. I wasted the first 3 years of my life just focusing on dividend stocks, which costed me a lot of opportunities in the market. Over time, I slowly started to transition away from dividend investing and move toward growth investing, which I'll talk about in the next point. But before I move on, if you do want to go the dividend investing route and invest your 1,000 ringgit there, the Malaysian market is still one of the best places for that. I personally stick with banking stocks because they've got strong fundamentals and have been paying out consistent dividends over the years. Maybank, for example, has been one of my favorite dividend stocks in Malaysia, consistently giving out solid dividends and even outperforming EPF returns most years. By the way, if you want to start investing and buying stocks, it doesn't matter if it's dividend stocks or growth stocks or Malaysia stocks or even US stocks, then you can definitely check out Mumu. Mumu is one of the best brokerage you can use if you are from Malaysia and want to start investing. It has one of the lowest brokerage fees in Malaysia and is regulated by the Securities Commission Malaysia. We are currently partnered with Mumu, and if you use our special promo link to sign up, or if you use our code RF88, you guys will get 250 ringgit when you sign up and deposit at least 1,000 ringgit into your Mumu account. That's an instant 25% return on your investment when you begin your investment journey with Mumu. And if you deposit more than 1,000 ringgit, you guys will get all these other cool rewards and shares as well. And if you already have a Mumu account, don't worry. Just open your Mumu app and search in the search bar, special deposit, click go, key in our promo code RF88 and deposit at least 1,000 ringgit to be eligible for this reward promotion. It's technically free money and I'm leaving it here for you guys, all of my Roti Telur fams, and I'll leave this promo link and code in the description down below for you guys to sign up. Now let's get back into the video. Now, the next way I would recommend investing the 1,000 ringgit is by putting it into ETFs. Honestly, I really wish I discovered about ETFs much earlier on my investing journey. If I had known about them back when I first started investing, instead of just focusing on dividend companies, my portfolio today could have easily been double of what it is right now. Because ETFs, in my opinion, are one of the best ways for beginners to start investing, especially if you don't have much capital or don't know what stocks to invest in. Now, if you don't know what an ETF is, an ETF stands for Exchange Traded Funds. To put it simply, it basically means a basket of stocks all packed into one package and one price. Instead of buying just individual companies like Apple or Maybank, when you buy an ETF, you're actually buying small pieces of many different companies all at once. For example, if you invest in the S&P 500 ETF, you're automatically investing into the top 500 companies in the US like Apple, Microsoft, Nvidia, Amazon, and so on and so forth, all by just purchasing one unit of an ETF. Now, there can be an ETF for essentially anything. There's an ETF that tracks the entire US stock market. There's an ETF that tracks tech growth stocks. There's an ETF that tracks gold. There's even an ETF that tracks Bitcoin. Basically, any ETF you can think of, somebody has already packaged them as an ETF and you can literally invest and buy them in the stock market. I actually made a video talking about some of my favorite ETFs to invest in. if you want to know more about ETFs in more details, then you can check out this video right here. Anyways, if I was starting again from scratch with only 1,000 ringgit to invest in, then I personally go for a growth focused ETF, something like VUG, which tracks the top large cap growth companies in the US. Think of companies like Nvidia, Apple, Google. These are all the growth companies packaged in this ETF. When you buy just one unit of VUG, you're essentially investing in all of these top growth companies. And here's the thing, when you're young and just starting out and you have a lot of time left in your investing journey, your main goal shouldn't be earning dividends. It should be growing your capital as much as possible. And VUG gives you exposure to some of the fastest growing companies leading the future, like AI, cloud computing, EVs, and everything driving innovation right now. But here's the catch, because these are growth stocks, they can be a little bit more risky and volatile to invest in, so don't be surprised if one month your investment goes up 10% and the next month it drops 15%. That's completely normal for growth ETFs. These companies are growing fast, but they also get hit harder during market downturns, or when policy changes, or if interest rate rises. It's perfectly normal. That's why with something like VUG, you need to have a long-term mindset. You're not investing for the next 6 months, you're investing for the next 20 years at least. And historically, even though growth ETFs are more volatile, over the long run, they've still outperformed many dividend or value-focused investments. If you're young, have time on your side, and can handle a bit of short-term ups and downs, then a growth ETF like VUG can be a really powerful place to start. And the way to buy these ETFs is actually really simple. You just buy them like how you would buy any stocks on the stock market. I actually use Moomoo for all of my ETFs investment as well. It's really simple, and I buy a fixed amount of ETFs every single month. To buy an ETF on Moomoo, just open the app, search for whatever ETF you want to buy on the search bar. In this case, we want to buy VUG, so we just type in VUG, and here you can see the chart for VUG, and at the bottom, click trade and hit buy. And once you're here at the quote page, you can just buy it just like any other regular stock on the market. The great thing about Moomoo is that even though the price for one VUG ETF is like $400+, which is about 1,600, 1,700 ringgit, don't worry, I know it's a lot, but you can actually still buy the ETF with lesser amount using the fractional share feature on Moomoo. So you can actually start investing into ETFs with just a small amount, like 50 ringgit or 100 ringgit or even 1,000 ringgit, and own a fractional share of that ETF. I think this is a really cool feature by Moomoo, and it allows people with lesser capital to own a share or ETFs that are too expensive for them. And yeah, again, if you haven't signed up to Moomoo yet, please make sure to sign up using my special promo link or by using my code RF88 to get 250 ringgit if you deposit a minimum of 1,000 ringgit. It really helps support this channel, and at the same time, you guys will be getting some free cash rewards and shares as well. I'll leave this link and code in the description down below. Now, another way that I'll invest 1,000 ringgit today is by buying individual stocks. Personally, I think investing in individual stocks that you have a really high conviction in is another great way to grow that 1,000 ringgit. And you don't need to buy and hold a lot of stocks. That's what an ETF is for. So you don't need to have like a big portfolio of 10, 20 different stocks. I think just having 2 to 3 stocks that you truly believe in is already good enough for your portfolio. And honestly, that's all you need to get started. Just buy the stocks on a consistent basis, every month or every few months, and then just hold on to them for your dear life. Don't panic and don't try to time the market. Just hold on onto the shares and let the business do the work for you for the years to come. Because here's the thing, when you buy a stock, you're not just buying a random number on a screen. You're actually buying a piece of a real business or a company. And if you start looking at stocks as businesses instead of just stock prices, everything changes. You start to think long term and you stop worrying about all the short term price drops, and instead you ask yourself, has the business actually gotten worse, or is it just a temporary noise? Think about it this way. Let's say you bought a company after doing your research, and that business is consistently generating more and more cash flow every single year. Then suddenly the market drops 20%. Are you going to panic sell your business just because of that? Of course not, right? If it's a good company, you'll probably be happy if it's cheaper. You want to buy more, right? That's the kind of mindset you've got to have when you invest in quality individual stocks. Invest as if you actually own that business. Understand how it makes its money, who its competitors are, what affects its business, and why customers keep coming back. The stronger your understanding, the stronger your conviction will be when prices are fluctuating. Because trust me, the price always fluctuates in the stock market. So if I had 1,000 ringgit to invest today, I'd invest the entire 1,000 ringgit into a company that I genuinely believe is going to do well in the next 20 to 30 years. A company that I truly understand or maybe even use on a day-to-day basis. For example, for me, I personally own a lot of Google shares in my portfolio, and it's one of the companies that I actually have the strongest conviction in. Why? Because I literally use Google every single day of my life. When I wake up, the first thing I do on my computer is use their search engine. When I check my emails, that's on Gmail. When I'm managing my documents or spreadsheets, that's on Google Docs and Google Sheets. And when I'm navigating through this horrible traffic in Malaysia, I'm using Google Maps. And even this video you're watching on right now, it's on YouTube, which is also owned by Google. Their products are literally part of my daily routine. Because I use and understand their business so well, I'm confident with how they actually make their money and how strong their ecosystem are. And on top of that, Google, or rather their parent company, Alphabet, isn't just about search and YouTube. They've actually got multiple business segments like Google Cloud, which serves thousands of different companies around the world, and also they are one of the biggest players in this AI technology race right now, with products like Gemini and also DeepMind. They also generate massive amounts of cash flows and have one of the strongest balance sheets in the world, and they're constantly innovating and expanding into new markets. In my opinion, even 20 to 30 years from now, Google is still going to be a key player in the technological world. Now, of course, this is just my own personal opinion. This is not stock advice in any way. I'm just using this to show you the kind of thought process you should be having when picking a company to invest in. Find companies that you personally understand, whose product that you actually use, and that you believe will still be relevant in the decades to come. It could be Apple because you use an iPhone every day. It could be Microsoft because you use Windows or Office, or even Tesla if you really believe in the future of EV and also AI. The key here is conviction and understanding, because when you truly understand the business, you won't panic when the stock prices drop. Instead, you'll see it as an opportunity to accumulate more shares for a cheap price. Now, the last way that I'll invest 1,000 ringgit, and honestly something I wish I started earlier too, is by putting a small portion of it into alternative assets like Bitcoin and also gold. Now, before you click away, let me explain. I know when people hear Bitcoin, some of y'all will usually think it's a scam, or it's too risky, or something only young people gamble with. And I get that. Bitcoin is volatile, no doubt about it. The price can drop 20% in a week and go up 50% in the next month. But despite all of that volatility, it's also one of the best performing assets over the past decade. Now, believe it or not, I actually used to be a Bitcoin hater back in 2017. I thought Bitcoin was a scam, like, what is this digital currency nonsense? I thought my Maybank app was our digital currency. I completely stayed away from Bitcoin because I thought it was just another bubble that was going to burst. But time and time again, I kept seeing Bitcoin on the news. Bitcoin just hit 10,000 US dollars, then $20,000, then $30,000, and then suddenly it was already up to $50,000 per Bitcoin. And honestly, every single time I saw that, I just couldn't help but feel like you know, the FOMO was real. And if you're an investor and you know that FOMO, the fear of missing out, is one of the worst feelings in the world, especially when you realize you could have been part of something huge. So ever since that day, I decided to start adding both Bitcoin and gold into my portfolio. Not because I have crazy strong conviction in these assets, but because I don't want to ever feel that FOMO feeling again. That said, I don't let it take over my portfolio. I make sure both Bitcoin and gold just make up a small portion of my entire portfolio. Bitcoin is around 10% of my overall portfolio and gold around 5%. That way, whenever Bitcoin hits a new all-time high, I don't feel the FOMO feeling anymore because I am now part of it. And if Bitcoin crashes by 50% tomorrow, it won't destroy my portfolio either because it's such a small percentage of my entire holding. The same goes for gold. I always keep a small portion of gold in my portfolio as well. Not to get rich from it, but to protect my wealth. And here's why I think having alternative assets like Bitcoin and gold is so important. They help balance and round off your entire portfolio. Stocks and ETFs tend to perform when the economy is booming, but they can also drop hard during recessions or market crashes. Gold and Bitcoin, on the other hand, often behave differently. Gold usually holds its values when market falls, and Bitcoin, while volatile, gives you exposure to a completely different asset class that's not tied to any company profits or directors or government policies. So by having some of these alternative assets, you're not putting all of your eggs in one basket. You're building a portfolio that can survive and grow in different kinds of market conditions, whether it's inflation, recession, or even a tech boom. Now, if you're wondering how to invest in these assets, there are two main ways. If you want to own Bitcoin directly, you can buy it from a regulated crypto exchange. I've made a few videos here on my channel explaining how you can actually buy and store Bitcoin safely in Malaysia, so you can definitely check those out later. But if you don't want to deal with setting up wallets or managing crypto yourself, you can also take the ETF approach. There are Bitcoin ETFs like iShares Bitcoin Trust, IBIT, or the ProShares Strategy ETF, BITO, which basically tracks the price of Bitcoin. So whenever Bitcoin goes up, this ETF will go up as well. And if the price goes down, the ETF price will go down as well. So you can directly invest in Bitcoin through an ETF. Same thing for gold. Instead of buying physical gold and worrying about storage and purity and thinking about where to hide this gold in your house and protecting it, you can also invest in this gold through an ETF like SPDR Gold Shares or iShares Gold Trust. These ETFs are backed by real gold and give you the same exposure just without the hassle. So yeah, at the end of the day, I'm not saying you have to invest in Bitcoin or gold, but I think having some exposure to these alternative assets really help diversify your portfolio. It's like adding a bit of spice to your investment mix. You don't need a lot, but a small amount can really make a huge difference. Because when the stock market isn't doing too well, sometimes alternative assets like gold or Bitcoin can perform very differently and help balance things out. It gives your portfolio a bit more stability and, most importantly, a peace of mind. So that's why I always keep a small portion of my investments in alternative assets like Bitcoin and gold, not to chase crazy gains, but more as a way to stay diversified and reduce my FOMO-ness, and also, help sleep better at night, knowing I'm not completely missing out. And there you have it. Those are some of my ways I personally invest 1,000 ringgit today, whether it's through dividend investing, ETFs, individual stocks, or even alternative assets like Bitcoin and gold. The main idea here is to just get started. Because at the end of the day, investing is not about timing the market. It's about time in the market. The earlier you start, the more your money has time to grow and compound. Even 1,000 ringgit today can turn into something much bigger if you stay consistent and patient. Also, don't forget to claim your free 250 ringgit when you sign up to Mumu using our limited promo link or by using our code RF88 during your first deposit. And if you already have a Mumu account, don't worry, just open the Mumu app and in the search bar, search for special deposit, click go and key in our promo code RF88 and deposit at least 1,000 ringgit to be eligible for this reward promotion. It's technically free money and I'm leaving it here for all of my Roti Telur fams. I'll leave this promo link and code in the description down below for you guys to sign up. Anyways guys, thank you for watching. Hope this video helped you out in any way or form in beginning your investing journey. If you have any questions, feel free to comment down below and I'll try my best to reply all of you guys, okay? And if you haven't liked this video yet, make sure to hit the like button and subscribe to this channel if you haven't already. Hope you guys have a great rest of your day. Stay safe, stay healthy, and I'll see you guys on the next one. Ciao, peace!